Let's do it. What's your assumption? Trade ideas from you, the viewer. And we got some from Reddit, too. Our Reddit trades have been freaking bangers. VST, that short put. That was a good one.
Very nice.
First one here. Let's do it. CRM, Jerome in Miami. CRM currently down $2. This is one of the dogs. It is in the Dow, too. So it's dog of the Dow.
Yes, it is. Yes.
Bullish, short term, assuming CRM will pop off with Now earnings. So now ServiceNow has earnings today after the close, I believe. Yes.
It does. You are right.
That's a much less tradable underlying $922 stock. So, a little bit wider markets there. So you're bullish CRM, buy the CRM 265 calls straight up for this week.
Wow.
Home in Miami.
Wow, they're testing you.
Wow.
265 is the stock at 250, and he wants to buy it for this week. Let's just look at the math here. If you look at the 9-day, December 2nd is earnings, but if you look at the 9-day options here, the 265s are a 20 delta. Markets are a little wide in here too, $1.46 to $1.78. Is there? So you'd be paying $1. Let's just call it $1.60 for something here. If you looked at the 55-60 call spread, which is out of the money.
But they want to do this for this week.
Well, I'm going
265 calls are 40 cents. They want to put 40 cents on it.
Oh. They want to go to the complete 2-day options.
How about this? I think we can play into this.
You want to play it to the upside. You don't have a problem with this.
Yeah. A little bit more strategically. What about if we sell the 240 put in November, the monthly, 23 days?
Okay.
So it's about a 30 delta put, right?
Okay.
So you're directional. You're certainly directional.
Yeah, I'm putting it up here on the screen. Go ahead.
You think we pop on the Now earnings, so maybe you buy the 255, 260 call spread in the weekly for this week.
Oh, for
so
this.
you give up $1. Yeah, so you do this. It's a stupid.
Yeah, it's a stupid. Just because you're long, and not because you're long.
The Super Bowl is what we should call it, but once upon a time we called it the stupid because you're doubling up.
If you were doing short, it would be a stupid. What call spread do you want to buy?
You buy the 255, 260 call spread in the weekly, and you pay $1 for that, or around $1, right?
You're selling the
$40.35.
255
for the call spread.
Oh, for the call spread.
Yeah, you give up $1.
You're paying $259.
Yeah. I can jump to my platform here to just kind of show what this risk profile looks like. So
sure, why don't you do that? That's good.
You essentially you're selling this put to finance buying this $5 wide call spread, and it plays into Jerome's assumption that 265 is a lotto ticket. You want to buy the lotto ticket for 40 cents, no problem. Go for it.
You do have unlimited upside, but this is their assumption.
Yes.
I mean, I don't have the same assumption as them, so I'm trying to make something a little bit more strategic that fits their bullishness.
So if it happens, we will certainly, participate in Jerome's assumption here.
Yes.
This way, if you're wrong, Jerome, we've got a little more time to be right here. We're selling premium down at lows. Volatility is relatively high. There's no earnings coming up until after the expiration. So it's kind of just we're with you.
Yeah.
But with a little bit,
a little bit of a caveat.
Yeah. I put that in 10 cents above the mid price and got filled. So if you are doing that trade, I did it at 265. You probably can get 275.
Yeah, I mean,
maybe
the natural bid, natural offer is about 60 cents wide. So, I don't know where you're going to get filled in this, but 265 is where you got filled.
That's 10 cents above the mid price now is at 262. It was 255, but it's going to move. You got $1.
I would go in, listen, you have time at home to do this. Go in at, you credit higher, 280, 285, and just walk it down until you get filled and play beat the Nick.
Yes.
So that is credit you receive, the better you did this trade.
Yeah. And we will no longer call it the stupid. We will call it the Super Bowl.
Super Bowl it is.
Stupid is mean.
Stupid is
stupid. We're not mean.
We're not mean. That's right.
All right. 1 for 1. We're with you, Jerome. Next one here.
And that was Jerome Powell, by the way. I did that for you. Gold bullish, GLD. What do you want to do here? Gold has rallied. I hope you did this yesterday. It's up already 1%. $4 on GLD /GC up 37 bucks. What do you want to do?
So this is from, I'm going to say Chris on Reddit. Put credit spread. They're looking at
Cristo. He's probably Greek.
Oh, yeah, there you go. Cristo.
Yeah, Cristo.
Put credit spread, 251, 246. So you're selling a $5 wide put spread. Short strike is around the 30 delta. Okay, risk for a smaller count with around a 70% pop. You had a great idea into the move today. You got a little bit of a move today in gold. Gold up about 1%. We're above that 4,000 handle. Definitely a smaller sized account trade. I like it. Had a decent pullback after the rocket move up. Might be a nice buy the dip. Stay with the overall trend. I like it. I think if you're in a smaller size account, this is certainly something you can look at. It obviously stinks at the stock that gold is up, or GLD is up $4, gold up, a little over 1%. You don't want to, you wish it was lower.
I do.
Into this.
I do.
But I can play into that. I currently have a little bit of upside long delta here with a crab trade, where I sold some premium in November against long delta and long premium in December. What do you think about adding a little diagonal spread here to kind of play into this?
You could do that.
I was thinking like maybe
I wish you did it yesterday.
Yes,
of
of
we were in the
course.
segment yesterday. It's not Christo's fault.
Yes. Just because you got some call skew here.
I like it.
I'm thinking like the 380 in December, and then you sell the 395 against it in November. You do the whole package about it's $6.48 debit, and it gets you about 22 long deltas, which is kind of similar to what your delta would be if you were selling the 30 delta put or around there.
Mm-hmm.
You like it?
I like it.
Bless it?
I like it. I give it my blessings.
Yeah, all right, good. Oh, 649. We're in.
Ooh, beautiful.
And this will hedge us against your junky iron condor that you put us in.
That's become a bastardized iron.
I mean, your rolls.
Sell the top, but buy the top,
Listen.
sell the bottom. I told you I'm the world's worst.
It's a new
commodity
regime.
trader.
You could take some directional exposure sometimes.
You think so?
Yeah, you
think
can.
So?
It's okay. This market moves fast. Sometimes you get bailed out. You got to have some direction.
Yeah. Thanks for the hindsight. I appreciate it. Nobody's a better hindsight trader than you. Actually, I met a better hindsight trader than you, but I'm not going to mention him right now.
Next trade here. CMG, what a dog this thing is.
What a dog.
Have you looked at CMG?
CMG has not participated in anything.
Anything. It's dead. After
ID
the
rank
split,
of 67 is good. It has earnings after the market closes today.
I think this was a bad split. This was too much of a split. You got to be at the 100 mark. The 100 mark is the sweet spot where you can get some volatility in those options, where it's tradable. I think here, I think it was a 50-1 split they did. Because I think it was like $300 or $3,000, $4,000 stock at one point.
Horrible.
I think it was a
nothing
50.
but lower since the split.
Something like that. Stock hasn't moved, and you don't have the gamma aspect to it. It's just like, so bullish CMG. Okay, this is Kevin, Charlottesville. Price back to 2023 levels, due for a rally. CMG
It's due.
Earnings after the close today.
Yes. What do you think here?
What do you think about?
Unlike gold, this has not had a move that's going to change your opinion here.
So, what do you think about a little bit of a wheel strategy here? You got earnings after the close today. It's a $40 stock. It's a pig.
Mm-hmm.
It's kind of like Verizon. Like we traded Verizon, long stock. If you're bullish here and you think, you know what, I'll buy it if we're at lows again. 52-week low is 38 and change, 38.30. You say, I'm going to buy it there.
Okay.
You could sell the 39 strike put for this week.
2 days to go.
Trades at $1.
Expected move is $3.30. It's trading at 40.5. Let's say you're halfway between the move.
Yeah.
You're getting a credit of around $1 and change. So if it moves lower with 2 days to go, how much premium is going to be left in that put? Not a lot, 50, 70 cents, something like that. So you're looking at straight. Yeah, I don't hate it. You got to
take stock, and if it goes lower, you can take stock. You sell the at the money call, and you say, okay, we get back to 40. We're out.
All right. Your brother would be happy that you're making this trade. He's a big Chipotle fanboy. I'm not a fan, but
I'm not a big fan of Chipotle either. I mean, I think you go to a local Mexican spot and get some real food.
Yeah.
This is
no bueno, as
we're gonna get filled at
my friends would say.
115 here. All right. We're going to sell a 39 put. We got filled at 116. We'll hold that through the end of the week to wheel into that. Show that whole process too.
Very good. All right.
Assuming it goes down. I'm hoping it goes up. Because then I don't have to do anything.
Showing you love.
CMG, we're in. Short put.
Awesome.
Potential wheel.
Even the S&Ps near their highs up 22. 23.
Cancel crash.
Cancel crash.
LE, is that's not lean hogs, it's cattle, I think. Yes, live cattle. They were limit down for 2 days.
Yeah, this is not. If I'm going to trade a commodity, and I stink as the world's worst commodity trader, I am not going into lean a live cattle here, as it is one of the biggest. It's like going into nat gas as opposed to oil.
Wasn't Pete in the live cat? Didn't he do a stint in the live cattle pits? I know he's been around in like all of the.
It's like live cattle. What do they call those? Cow pies. He was everywhere, all over the city. And he was like one of those.
Isn't there some trade where you do the
Widowmaker?
No, the Widowmaker. No, but with live cattle, like you trade like soybeans as the feed or something. One of them, or corn.
There's the crush. You can do soybean meal versus
meal, but then you do it with the hogs and the live cattle.
Yes. Pete would do all of those things to us. Not
we're gonna have to bring him back for that. Speaking of, I hear Lil Birdie saying that Closing the Gap Futures edition might be back on some capacity.
I love it.
Soon.
I love it. That'd be awesome.
CME. So we'll see. Teresa in Switzerland, we are gonna pass on these. It's just a little bit past our brain power.
Mm-hmm.
Next slide.
So
we're gonna pass on the lean hogs, or on the live cattle. I'm sorry. Roblox. All right. Bullish. Ooh. Roberto, south side of Chicago and the Netherlands, because they're certainly not the same places. Those two places, big difference.
No.
October 31st. So we're going Halloween, spooky season. Earnings play, selling the 30 Delta puts expiring end of the week. Ooh.
Oof.
What do you think about this?
Oof. Roblox. I don't know. $132 stock. Great IV rank in here.
The 2-day 30 Delta puts. Have you looked at them yet? Don't look. What do you think?
Say again?
The 30 Delta puts in the 2-day.
Oh my God, I wouldn't know how to price them. What's the monthly implied volatility in there? Can you give me that?
Oh, you got the monthly is about 90%.
What's the implied volatility there? Like
in the 2 days
or something?
230% implied volatility.
Oh my God, these puts are going to be $8, $7, $7.50, $8.
$5 at the 30. Yeah, $5-6.
2 days?
2 days to go.
What strike?
Like the 120 puts.
Oh, 120. I thought you said 130. Sorry.
No.
Sorry. 130s are 868.
Yeah. But if you look at like in the monthly, they're $8. I mean, you're right.
Yeah, unbelievable.
What do you think here?
Expected move of $19 over the next 2 days. I don't love Roblox that much.
Yeah, this one's spooky.
I mean, if they're bullish on this, right?
Yeah.
I mean, so if you want to go into November with the earnings coming out tomorrow?
I think they want to do the October 31st.
October 31st. October 31st would be the 2 days. I think if you do like a put ratio spread, you might be able to do something there. You got a $20 expected move that brings you into the teens at least.
Mm-hmm.
So like the 120, and again, markets are going to be wide in here. The 120,
115.
Yeah, I was going to say 120, 114 even, but 120, 115, something like that.
Yeah.
Maybe. I mean,
I kind of like that.
119, 114, you can get over $1 for it. Again, you're going to have to be selective with your pricing in here. Markets are 50, 60 cents wide. You're going to hate yourself being stuck in this one. It's going to be a nice trade for you.
I know. But that's the fun of it. You got to,
Yes, yeah.
I put it in at 175. And
what are you doing? What strike?
I'm doing the 120, 115 put ratio spread in the 2 day.
Got it. markets are 60. Yeah, mid price is probably pretty close.
I think I'll be at
$1.50,
150.
$1.45 probably, if I had to guess.
I'm gonna go down to 150 and let it sit, and that's my price.
That's my price. I'm sticking to it.
Yep. No fill there. We'll let you know if we get filled on that one. But thank you,
All
Roberto.
right. Awesome.
Next one, please.
Next one.
ETH A neutral November. Mike in Salem. No directional bias. Strangle. I would say if you don't have a position on, I would start with this, or maybe sell put, or do a meteor put to further out of the money call. You have call skew in both ETH A and IBIT, and I lean long, so that's my bias here. I am long and locked and loaded. I just closed out the calls on both ETH A and IBIT this morning. That's my position. I'm not going to add any more to it. I'm pretty full.
Very good. Volatility staying bid here. That is something that we talked about earlier this morning. We also talked about not doing the 0 day. 0 day in SPX now 33.5. So that's actually expanded into this move, relatively $10 move in even the S&P. So I think a good no trade there, and also a good call on volatility staying bid throughout the day.
Yeah. Where are we at on our B? Oh, now the stock's up. Now they're pumping vol into that. In B, it's up 22, 135. So gotta sit. I still got that $7 order in. We'll see.
Okie dokie.
All right, next one, please.
Next one, please.
Amazon bearish. Come on. Chief in the East on Reddit. October 31st. How about an Amazon call calendar spread? I put on
About that.
So they put on the 227.5 short call for the 31st, which is this week, and then long the 230 call. You're basically flat delta because you're selling a closer. You probably did this when the stock was a little bit lower, but typically with calendar spreads or diagonal spreads, you want to be at the strike or further out of the money because you want it. This is sort of like a non-directional trade. I wouldn't even put bearish or bullish here. Like a calendar spread or a diagonal spread, when we set them up, they're directional with at least a small amount of delta. If you're doing a calendar spread, you go to the 40 delta for the long option and you sell that same strike in the shorter duration, you're going to net out 10 to 15 deltas. So you're slightly long delta. You want to move towards that strike. So you're kind of all over the place here.
You are kind of all over the place here.
Yeah, this is one of the trades where you probably do this for a small credit even, because your risk is really that embedded 2.5 point spread that you have, as opposed to the calendar spread, which you probably do for like a $2 debit. You have the $2 inversion or spread there. Yep. You're all over the place here.
You're all over the place here.
Back to this. I don't know if I'm going to lean bearish here. I have an upside play here. I did like an upside calendarized ratio, aka the crab trade. So I'm long the 230 call in December. I'm short 2 of the October 31st 240. So it's a call ratio, but you have shorter dated short premium. That spread is basically unchanged. I'm out about 40 cents into this move, but that's going to change quickly with earnings coming up here.
Yes.
It's going to be, it could be a big swing here.
Big swing one way or the other, yes.
Yeah, I mean, your risk is above like 245, a new high. Man, do we add to this? I feel like Amazon has not had the same participation.
Not at all. Amazon earnings come out tomorrow after the close. You actually could wait if you're looking for an earnings trade. I think you have enough position. If you want to wait, you can wait.
No, we're not waiting. What's your assumption? We're slinging
it. It hasn't participated.
And we don't have a ton of position.
Right? It went from like 215 to 230. It's not at its highs of 240 and change.
Yeah, but when you look at like Microsoft, that's up 200%.
No argument. No argument.
Yeah, then don't.
No argument.
Don't argue with me. I think we do maybe we sell some premium here. You want to sell put here?
Okay. You're the young gun. You want to sell puts in here? Sure.
That's scary.
I'd rather do a put spread.
Oh, what are you at?
Why don't you do a diagonal spread? You like those?
Yeah, I have
That
the.
doesn't give you that tail risk of that Amazon can give you. It won't give you the instant gratification or as much instant gratification as you would like.
I think I want to sell the 210 puts. November 21st, so you get a little bit of duration here.
Okay, I love it.
About a 20 delta. I have the upside play with the crab trade. It has a little bit of upside risk, but I think this is where we're going to go. We need some. I don't have a lot of short premium on.
No, you don't.
325.
Very good. Very good.
All right. Next one, please.
You can always sell a call against that eventually if you wanted to. You can always roll it out. You did the 23 days. If you get in trouble, you can take it from November to December.
No problem.
You know, you're not like stuck in a position on like the 1 days.
Yes.
That you're kind of in it to win it kind of thing.
Starbucks, Austin, in Boise, S-Box, has gone pretty much nowhere.
Pretty much nowhere.
Earnings play, thinking about long earnings diagonal, want to sell the front month calls, but what's the best back month to buy? I typically go to the 50-day just because it's a little bit lower implied volatility, but you could do either one. I mean, it depends on how much capital you want to put out there too. Right. I mean, the cheaper, the shorter dated options are going to be cheaper. So, you want to pay $2 instead of $4, you go to the November expiration. In terms of the decision making here is mostly about the short option. Where do you put that? And I usually go somewhere around the expected move.
That's right. So
let's call it the 90 strike. You sell it at $1. You want to go out to December and buy like the 85. It trades at $3.12. So your max risk is $3.12. You probably got about $2 of potential upside if you get to a 95 strike. If you go nowhere or go a little bit lower, your short-term risk is probably about $1. Like you risk $1 to make $2.
Yep.
And it's a roughly 50-50 shot on entry, but you've got $1 of extrinsic value that goes away at the end of the week. So if you get a non-move, you're probably up $20-50.
Correct.
All right, so let's do it. We'll do the 85-90. So we're going to December, buying the 85, and then going to the 90 in the 2-day. I also have another one that I've had on, just to give you some context. I did the 90-85, and we could view this on the market snapshot. I did the 90-85 when the stock was at 86.
So the snapshot, explain what it is. It really shows you where you put on these adjustments in the position, correct?
Yes. So you click. So this is, I just popped this window out. This is the order chains. You right click on your order here and you go to the view market snapshot. It'll pop out this window that gives you an idea of where your trades were at that time. So you can look at underlying price, IV rank, all sorts of metrics. So volatility has expanded a little bit going into earnings, not a shock. Stock is down about $2 on from when I put that trade on, which doesn't sound like a lot, but on an $80 stock, it's a pretty decent move. I mean, today the stock's down $1. It's a little over 1%. It's down 2-3%. There's my Roblox. Ooh, God, and I got price improved. That's scary.
You got price improved on an order that was sitting there, right?
That was sitting there at $1.50. That's spooky. They're like, oh, this guy's a Johnny. So I'm only out
because Roblox is unchanged now, up 27 cents.
Yes. So I'm out about 40 cents on a $2 or $3 down move in Starbucks over that period of time. It just tells you about, the extrinsic value decay that you're getting from that shorter dated option.
Very good.
Got caught with that Roblox fill. I will get that one through. So I'm gonna put this on. I'm trying to get filled to like 318, 19, something like that.
Even the S&P's up 17. They just had their biggest move lower of 10 handles over the last couple of days.
Are you scared? Do you need me to hold you?
Not yet. Volatility up 8 cents. Russell
got price improved by 10 cents on that trade. And that has long delta.
Right. It has
into an up move, which means they're pumping some vol.
They are pumping vol. Right. In 230% volatility.
Yeah. It means going to 260.
You have almost a $20 expected move in there, which brings you down to 121, 122 in Roblox. That's what you're talking about, right?
Yes.
Let's put this up. Let's just show you what you did here. So you got $20 expected move here with the stock at 132. Let's just round up. Your break even on this trade is $5 plus the credit you receive, which brings you down to 110 plus the $1.60, which brings you 108.5. We'll just round, which is just about the expected move. That's why you have an almost 85% pop. So I like the trade, the way it sits.
Yeah.
The price improvement just means that there was one side of that had a customer order that you were able to get filled on. The other side was able to hit the bid or take the offer. That's what it came down to.
Very nice.
Beautiful.
Next trade here. QQQ, OK Avocado. This is from Reddit as well. Bullish November.
Everybody's bullish at highs. Everybody.
Well, they gave us VST and NVIDIA, which have both been home runs.
Who did VST yesterday for his
OK Avocado.
Who did VST yesterday?
Oh, you did.
That's right.
Intraday. You did with a diagonal spread. I like to see this new you. You're glowing.
Bought the low in VST.
Happier.
In an hour, we made $200. I took it. I think the trade would be up.
You ever made $200 before? Before that?
Never
before that, you'd have to brag.
Before I met you, son.
Brag about the 20 cents, the 10 cents, 15 cents.
You're gonna make another $2 on that trade today with VST up another $6 or $7.
Too many Mag 7 earnings this week, bullish most. So using QQQ, diagonal spread with IV low, sell the November 7th, 650 call, and then you're buying the 240 call. So you're doing a call diagonal spread. I like this. I've got some long delta across the board. So if you don't have any long delta and your assumption is that we're going up, which I am of that assumption, I think you put this trade on, but I'm pretty good here. And I use the Qs as my short delta, and I get long delta in the single name stocks because I want the convexity of a Microsoft earnings.
Sure.
And the downside protection of the ETF itself, where it's lower volatility, where it's cheaper to play the downside versus, Microsoft, where you have those tail upside moves. So
it's cheaper to keep her.
Yes. So I'm gonna pass on this one, but I'm with you, and I will participate if this plays out.
Beautiful.
Next one, please. Thank you, OK Avocado. Charles Stewart. Okay, this is another Reddit question. Google or Meta, Google/Meta, they don't know. Short term, waiting for for Fed Chairman Jay Powell to go. Pow! I want a nice fat volatility run up after the Fed announces so I can sell credit spreads on Google and Meta for earnings today. Both of them have had nice 10-point IV drops historically the day after the announcement. So you're kind of playing for the volatility to stay bid. Ideally, Google and Meta being up, and then you're going to sell some premium here. I don't hate that idea. I just can't do it right now because I got to wait for those moves.
I agree.
Google, I have basically flat delta. I have long delta in Meta. So I'm with you. If this happens, I will think of you, Charles Stewart, and I will put those trades on.
I will have you in my dreams,
I will mention you, Charles Stewart. And on Reddit, I will post them if we do it tomorrow. If we get these moves, I will call you out. You got it, Charles Stewart.
I love it. I love it. Good job out of you. How many did we get there?
We got a ton. I don't know if there we go.
Okay, we got a crackerjack team.
Yeah. They're a little off on this. I mean, John gets like that applause is for you, John. You did good. Not a
participation profile.
Yeah, you get a participation trophy.
It's all Kai.
Oh, Kai.
Damn.
Throwing Kai on the. Oh.
You're there, Kai. You're there. The diagonal spread, the QQQ, we're with you on that assumption. So I will give it a check mark. So we got 9 of 10. We passed on the live cattle. That one's just, a little. I don't need to blow up this account with the live cattle trade. So
good job out of you.